Singapore's key exports have suffered a fifth straight month of double-digit decline, falling 11.2% last month from the previous year. One analyst says it's the longest continuous double-digit slide in about 10 years.
Singapore's July exports performed better than what most economists expected. On a monthly basis, exports rose by 3.7%, partly reversing the decline in June.
But make no mistake, they're still falling quite sharply. They remain well below trend, and looking at the details, it's still not very encouraging.
Within tech itself, what we're seeing is that yes, it is still down, but I suppose there are certain components like consumer electronics which did better than expected.
Electronic exports decreased by 24.2% in July, easing from June. Non-electronic products also dipped by 6.6%, an improvement compared to the previous month, with pharmaceuticals, specialized machinery and primary chemicals leading the downward trend. Non-oil exports to most of Singapore's top markets fell, especially to Japan, Malaysia and Hong Kong. The only bright spot was exports to the US. Analysts say risks like the US-China trade tensions will remain.
The outlook for August may be a bit tricky because we may get some front-loading of exports from the Chinese side, and some for the trade going through Singapore, just to bypass, the tariffs that have been announced from the US in September, but eventually it's going to come down.
I think for August, we're still looking at double-digit decline itself, which then would brings the period of continuous double-digit decline for this year to the longest since the 2008-2009 recession itself. So this is how severe in terms of the fall in our exports of manufactured goods.
Mr. Song says the government's full-year NODX forecast of an 8 to 9% fall is realistic. But Singapore will have to register about a 5% decline for the last few months of the year.